It's been an incredibly eventful 3 months since the last earnings call. So we're focused on the numbers, obviously, but we also want to hear from the company on their over-the-top plans and how Fox may or may not fit into that. We've had a little bit of that.
First, just hit me on what numbers are you looking for?
We're a little bit above consensus on operating income for the quarter, a little bit at broadcast, a little bit at parks. It's a little bit of a weird quarter because you have some Easter timing headwinds, but for the most part, the street looks past that. The one area we know the studio will be hit by Han Solo, and not in a good way, so we have that baked into expectations. But actually, I think ESPN will be a story of less bad, which has been kind of the theme of earnings this quarter across media. We have a $130 price target in our base case, $160 in the bull.
And in terms of what you want to hear, first of all, on Sky, what are you expecting to hear?
Well, it's a process that's heavily managed by the UK takeover panel, and Disney will have to stick to the script on that. So they're probably relatively confined on what they're going to say unless they're going to make a big public announcement.
But your expectation is they let it go to Comcast?
I think that's the market's base case right now.
And would you want them to let it go, given where the price is now £14.75 already from Comcast?
Look, I think that when you look at the entire transaction around Fox, there's two big themes: international diversification and then a shift to streaming. And obviously Sky plays into that, but there's lots of pieces of the puzzle here. Hotstar in India, Hulu, which I think will probably emerge as a huge debate on Disney's stock coming out of this deal.
Okay, so let's have that debate right now, though.
Okay,
what do you think they should be doing with Hulu?
Well, I think they'll go global with it. That's probably the biggest thing that will change from how Hulu
And that, you believe,
today.
will be a separate franchise than the Disney-branded OTT service?
Absolutely. So Disney-branded OTT may be bundled and sold through Hulu, the way HBO is sold or Showtime. But Disney, I think the press has focused on Disney's OTT service as a Netflix competitor. I think it's a narrower product. I think Disney believes it's a narrower product, which means, by the way, less investment needs. It's focused on families, Disney brands. We're estimating 20 million subscribers by 2024 globally.
That's, by the way, what Hulu has today.
In just the U.S.,
right.
Yes. But again, Hulu is a broad service. I mean, you've got content across lots of genres, lots of studios, lots of brands. Disney is focused on Disney films, Star Wars,
But one
Pixar.
of the issues will then become, on the Hulu side, if you believe what you're talking about is true, there'll have to be massive investment in Hulu. And the other question, in part because I assume everybody else who's been a partner with Hulu in the past is going to try to pull some of that content back.
On the first part, I would agree with you. On the second part, I would probably push back. We think Hulu's already losing about $1 billion a year of consolidated operating income. So it is a heavily invested product at the moment. Taking it globally obviously will require more capital. But it's a lot of revenue, and it's 20 million subs. So Disney goes from a media company that is sort of trying to figure out how to pivot their business to, you close this merger, day one, you have scale in OTT out of the gate. You now have a $6 billion, $7 billion
You believe they're going to end up buying Comcast out of Hulu?
You know, we'll see. I don't have a strong view on that one.
Ben.